Good morning everybody and welcome back to episode 180 of Enter Crypto, where twice a day I keep you informed and fully up to date on all things crypto. So if that sounds like something you'd be interested in, then like, subscribe and don't forget to click on the notifications bell as I put out a new video every 12 hours. So the story we're going to be talking about this morning is from CoinDesk's markets section, and it's about Bitcoin long liquidations. So this article is titled "Bitcoin long liquidations hit their highest level since August." Centralized exchanges liquidated bullish long futures worth over $62 million during the early Asian hours. This is written by Omkar Godbole, and as always we'll read through the article and we'll make remarks after. So Bitcoin's early Friday slide, triggered by concerns about crypto-friendly bank Silvergate, shook out bullish leverage from the futures market. Exchanges liquidated longs or bullish Bitcoin futures worth over $62 million during the Asian hours, which is the highest amount since August. According to data from Glassnode, short liquidations worth just over 500k were also observed. Liquidation happens when the market moves against a trader's bullish or bearish bets, leaving them with insufficient funds to keep the leveraged trade open. Unless of course you get a margin call and you send them some more money to keep your position open. The dominance of long liquidations shows the leverage was skewed on the bullish side, meaning most traders were positioned for a price rally. Bitcoin, the leading cryptocurrency by market value, fell over 5% to 22k, reaching the lowest since February the 14th, CoinDesk data shows. Shares in Silvergate fell 50% on Thursday after the crypto-friendly lender said it's evaluating its ability to continue as a going concern and delayed filing its annual report with the SEC. Bitcoin's late reaction to Silvergate news perhaps stemmed from fears that the crisis at the bank, known to facilitate fund transfers between exchanges and other market participants, may worsen the liquidity crunch in the crypto market. Most exchanges on Thursday announced a suspension of business ties with Silvergate. And so I just want to bring up a chart from what's called a website called The Block. And you can go and look this. You don't need to sign up or a subscription. It's entirely free, and it's a bit like an unpaid version of Glassnode in a way. And so even though the article says there has been $62 million of liquidations on the long side, we can actually see here that there has in fact up till now been 72 million, almost $73 million, which is obviously a huge loss, a huge amount of money to be thrown down the drain. So we can see in this latest development in the world of cryptocurrency, or the cryptoverse, Bitcoin long liquidations have hit their highest level since August, and according to this report, centralized exchanges are liquidating bullish long futures of worth over $62 million during these early Asian hours. These liquidations have been triggered by a sudden drop in Bitcoin's price, which basically fell by over 5% within a few, a very short amount of hours, within 5 or 6 hours. This drop then causes panic amongst all the traders who have taken out these long positions because they were in the hope that the price would continue to rise. As a result, the exchanges, these centralized exchanges, are forced to liquidate these long positions, meaning that the traders lose the money, and this actually leads to a significant amount of Bitcoin being sold off, which doesn't help, which then has a domino effect and just sort of makes the price cascade, and then more liquidations happens, and then the price cascades even more, and then we get even more liquidations, and it's like that until all the leverage and all the basically all the leverage is out of the system, and we've got back down to a real fair value for the asset that whichever asset it is. In this case, it's Bitcoin. So these total value liquidations reached over $62 million. It's now $72 million according to our chart, and this makes it one of the largest liquidation events in recent months. Now this news is, well, it will be a big concern to many of you in the crypto community who've been eagerly watching the price of Bitcoin in recent weeks, especially with it hitting new lows a few weeks ago. And despite a number of bullish indicators, we still have to err on the side of caution and just remember that crypto markets are volatile, they're unpredictable, and they are in their infancy. So that's why we're getting these sort of events. And so in light of this latest development, it's likely that many traders going forward will be taking a more cautious approach in the weeks and months ahead. As I've said before, I can't say this enough, it's remember that cryptocurrency markets are highly volatile. So if you're trading spot and you're just buying spot and holding onto it or hodling it, then you don't care, it doesn't matter. If you've got a 5 or 10 year plan, low time preference, then it's just not relevant to you. You just don't care, and these events are kind of just something to be brushed off. This is really only affects and impacts traders who enjoy using leverage. So it's important to stay informed and stay up to date, and that's why I basically created this channel, to keep everybody up to date on all the latest news and developments. It's also important to know that this is a normal part of how an open and free market operates. And so if you sort of value individual freedoms and minimal government intervention, then in the context of this news article about Bitcoin long liquidations, we would see this, or I see this as an example of the market regulating itself without the government's interference. We don't need the government to come in and say what needs to happen or protect people or do this. This is totally normal, totally natural, the way that a free market should work. And actually, you can view these liquidations as a necessary correction in the market. It stops bad behavior because people are using leverages, which is essentially debt, to boost their positions up to obviously make more money. And so this punishes the people who've taken on too much risk, and it rewards the people who've taken very little risk, or none in this case. So it actually allows for a more accurate reflection of the true value of Bitcoin, because we get to flush all that leverage out with these sort of liquidation events. So from this perspective, I would argue that any government regulations or interventions would only hinder the natural workings of the market. So that's my thoughts on this particular article. Remember everybody to please subscribe to the channel, join my team, and I'll keep you updated on all things crypto every 12 hours. Don't forget to smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.